You are on the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView, and in today's video, we will be breaking down a pair both from a technical and an order flow perspective to understand where are the best probabilities for a trading opportunity on the pair to obviously be capitalizing on it. So the video will be both very educational and practical, so without further ado, let's get straight in it. Okay, so let's make a full breakdown of the situation that currently we have on gold. Now, the reason for which I want to speak specifically about gold is because at the moment it is a pair that is very near to providing to us a good trading opportunity in either ways in which the market will actually move. So I want to show you the situation that we have on the pair, and as usual, I will keep the analysis as educational as possible. So first, I will be breaking down the technical aspect of this market. We will then go and see what we have from an order flow perspective with the commitment of traders, which is what hedge funds are currently doing in the market. And by the end of the video, we will know by using the combination of what we have from an order flow perspective with what we have from a technical perspective to understand what kind of opportunities we can be looking for on gold. So I really suggest that you watch the video until the end because it will be filled with valuable lessons that you can take from it. Now, starting from the monthly time frame, what do we have? Now, starting from the monthly, what we have is a market that has just provided a quite strong impulse to the upside. Now, generally speaking, after an impulse, what you expect is for the market to provide you a retracement. Now, if you want to measure this retracement, what you have to do is take your Fibonacci on the impulse leg. So from the low to the high of the impulse. Now, if we take our Fibonacci from the low to the high of this impulse, what we can see is that the market has retraced to the 50% of the Fibonacci taken on the impulse leg, from which the market has started the continuation to the upside. In fact, this is how the pattern most of the times actually plays out. You have the impulse, then the market follows with a correction, and after the correction, the market is supposed to create the continuation to the upside for the creation of the higher high. And this is exactly what the market has now started to do from a monthly perspective. We have the impulse, correction, and we have started to create the continuation to the upside for the creation of a higher high. Going down on the weekly time frame, what do we have? Now, from a weekly perspective, situation is quite interesting. We have a market which currently is inside of a quite strong resistance zone. Now, why is this area a strong resistance zone? Because, first of all, this is the previous support now turned resistance here. Now, as you know, in the market, if you have a support area and that support gets broken to the downside, that previous support is turned resistance in the market. And this is exactly the area that we are currently testing and that is actually acting as a resistance area. What we can also see is that after an impulse, if we want to measure the correction, what we have to do is take our Fibonacci from the high to the low of the impulse. And if we take our Fibonacci from this high to this low, what we can see is that the market currently is testing exactly the 0.618 of the Fibonacci taken on this impulse. Now, the 0.618 is the golden ratio. So the Fibonacci, the strongest Fibonacci level. So currently we are testing a confluence of resistance zone given by the previous support, term resistance, and the golden ratio. So the 0.618 of the Fibonacci taken on the weekly impulse. Going down on the daily time frame, what do we have? Now, from a daily perspective, situation is quite clear. Now, we had spoken about gold quite a few times in the past. I spoke about gold when the market was here. I made a full breakdown explaining all the reasons for which from here we wanted to see the market create a move to the downside to go and test at least this area here. And that is in fact exactly what the market did. The market created the move to the downside and it even exceeded our downside target, creating this massive impulse to the downside. Now, after this impulse, what did I make? I made another breakdown explaining all the reasons for which we wanted to see the market create this head and shoulders. And from here, I explained all the reasons for which we wanted to see the market create a nice move to the downside. And again, that is exactly what the market did. Then I spoke about gold again after the market had provided this W formation, and I made another breakdown when the market was here, explaining all the reasons for which, from here, we wanted to see the market create this move to the downside. And again, that is exactly what the market did. And then I spoke about gold one last time after this W formation, and I explained all the reasons for which we wanted to see a retracement at least the 0.382 of the Fibonacci taken on this impulse, which is in fact exactly what the market gave us. The market gave us the move to the downside as we wanted to see from our previous breakdown. And by the way, you will find all this previous analysis linked in the description, so you can go and check it out for further reference and more free education. You find everything linked below. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover or analyze in the next videos. But at the moment, what do we have and how we can be looking to capitalize on the next move for gold? Now, what we have at the moment is a market which has just created a strong impulse to the upside, followed by this correction. Now, as we have seen at the beginning of the video, after an impulse and a correction, what you expect is for the market to create the continuation to the upside for the creation of a higher high. However, as we have already seen from a weekly perspective, all this zone is extremely strong resistance. It is a confluence of resistance area. Therefore, we have a bullish pattern from a daily perspective, which is testing very strong weekly resistance. Now, in this kind of situations, when the time frames are not aligning, it's very risky to be looking for any kind of opportunities. So how we will be approaching this kind of situation with students? Now, before I show you this, let's first go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market. Now, what we can see is that with the last report, hedge funds have increased their long positions by 2.3K, bringing the long positions at 340K and the short positions at 69K, increasing the long exposure to 61.9% and decreasing the short exposure to 12.5%. And the net positions obviously increased from 269K to 271K. So gold is getting stronger and stronger. Therefore, we should definitely see the market create this move to the upside. But will we be joining this move to the upside with students? Obviously not. Why? Because it's too risky to be looking for a longing opportunity at a weekly confluence of resistance zone. So the way in which we will be approaching this is, as usual, being reactive and not predictive. What does it mean? Now, there are two key areas that we can identify here on the daily time frame, which is the resistance that we have at this high and the support that we have at this low. These are basically the two important levels that gold currently has: the support that we have at this previous low and the resistance that we have at this high. Now, until the market will remain trapped in between the resistance that we have here and the support that we have here, there are no good probabilities nor good risk to rewards on gold, because we have a bullish pattern on the daily but resistance on the weekly. However, if the market will manage to break above this high, at that point, that would provide a very good opportunity. And at the same time, even if the market will break to the downside, that would provide another very good opportunity. Let me explain what we will be looking for with students if the market will break either to the upside or to the downside. Now, just keeping things as simple as possible. Until the market will remain inside of this area, we will not be looking for any kind of opportunities with students. If the market will break above the high, then this previous resistance will be turned support here. So after the break above this previous resistance, on the retest of this structure, this is exactly where we will be monitoring price action with students from a 4-hour perspective. Why 4 hour? Because as usual, monthly, weekly, and daily combined with the COT data are the best time frames for the direction of the market. But when it comes to confirmations and entries, the best time frame is the 4 hours. So after the break on the retest inside of here, we will be monitoring price action from a 4-hour perspective, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and completion of this impulse correction and impulse pattern to the upside, because the weekly resistance will be broken to the upside. On the other side, if the market from here will melt below this previous low and break this support to the downside, in that case, we will have the creation of this M pattern. Now, after an information, what you want to see is the market create a move to the upside to go and complete the pattern at the previous support, now turn resistance. So if the market will manage to break below this low, then what we will be doing inside of here is monitoring price action from a 4-hour perspective, waiting for the market to shift from a 4-hour bearish market to a 4-hour bullish market. And as soon as the market will shift from a 4-hour bearish to a 4-hour bullish market, at that point, we will be adding gold to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good probability and very good risk to reward at that point for the move to the upside and for the market to complete this M formation at the neckline, which is the previous support, now turned resistance. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, take profits, as well as having me answering all your questions every single day. So I really suggest that you go and check it out, and I will see you in. The link is in the description.